Good evening and welcome to the John F. Kennedy Jr. Forum. My name is Sewon Park. I'm studying economics at the college, and I'm a member of the JFK Jr. Forum Committee here at the Institute of Politics. Before we begin, please note the exit doors, which are located on both the Park side and the JFK Street side. In the event of an emergency, walk to the exit closest to you and congregate in the JFK Park. Please also take a moment now to silence your cell phones. You can join the conversation tonight online by tweeting with the hashtag #RadicalTransparency, which is also listed in your program. Please take your seats now and join me in welcoming our guests, Ray Dalio and Larry Summers.
I am delighted to welcome my friend Ray Dalio to the Kennedy School Forum. Ray Dalio has lived a remarkable life. If there's anyone who represents an American success story, born in less than glorious circumstances, employed early in his life as a golf caddy, where, among others, he caddied for the Duke of Windsor, Edward VIII, and subsequently for Richard Nixon, who he tells me did not have an especially distinguished golf game. Ray went on to the Harvard Business School. By the time he got to the Harvard Business School, he had already been a substantially successful stock trader. The first stock he bought in his life was Northeast Airlines, which he bought because it had a low price, and so you could get a lot of shares with the limited amount of money that he had. It tripled when it was taken over, and Ray was hooked. Ray went to the Harvard Business School. Ray founded Bridgewater Associates in a couple of incarnations, the second of which lives on today. Philosophers say that you can judge the wisdom of acts by achieving the greatest good for the greatest number. In the same way, you can judge the success of asset managers by earning the greatest returns on the greatest amount of money. And while there are many successful hedge funds in the world, there are none that have earned as much in toto for their investors as Ray Dalio's Bridgewater. And while Ray will talk about the various ways within Bridgewater in which there is collaboration and debate in a few moments, anyone who has followed from the outside will know that there would be no Bridgewater without Ray's driving and consistent vision. Driving and consistent vision both with respect to theories and understandings of how the market and the economy operates, with respect to ways of knowing, checking, verifying, and exploring hypotheses, and with respect to maintaining a very distinctive culture that puts premium, as Ray sees it, on the meritocracy of ideas. The results speak for themselves in the returns that have been earned, the volume of assets that have been gathered, and if you're in markets, it's not wholly unreasonable to apply a market test, and Ray is comfortably within the top 10th of the Forbes 400. if one reads the Forbes 400. His advice and wisdom is eagerly sought on financial matters and economic matters by policymakers around the world, and we are very fortunate to have him with us tonight. So welcome, Ray Dalio.
Thank you.
Ray, you and I first met just about 20 years ago when I was at the Treasury working hard to introduce the index bond, and you were of the view that the index bond was a potentially important security which your firm could benefit from trading substantially. And we had a number of, shall we say, vigorous dialogues, whereas the usual conversation between somebody in government and somebody in the markets takes the form of the person in the markets being very polite, almost obsequious to the person in government, and the person in government being highly polite and solicitous back. You and I found ourselves using phrases like, "That's just wrong," and "that can't be right," and "surely there's a better way to think about it than what you just said," with a great deal of vigor. And that was reasonably congenial to me, I suppose. This might not be a surprise to some of my friends in the audience. And it was reasonably congenial to you, and we became friends. But what I came to realize as I read the manifesto you posted on the internet some years ago, and then had a chance to read your recently published book, that these principles of direct confrontation of ideas were really central to how you approached life and central to the institution that you had created at Bridgewater. So maybe a good way to begin would be for me to just leave it open for you to talk for a little while about those principles and your vision and approach.
Okay. It's so interesting to me, and I think it's interesting to you probably, that thoughtful disagreement to get at truth and to just cut through it isn't a joy for everybody. And psychologists examine this because they say so many people form a conclusion and have a amygdala response that it's an attack if there's disagreement. Like, isn't it a pleasure to be able to knock things around and just try to figure out what's true? Isn't thoughtful disagreement a joy to try to find out what the best answer is? Isn't it an oddity that exists? It's an oddity. Anyway, I spent more time speaking to neuroscientists and psychologists about that. Larry said that I could take, 5 to 10 minutes to try to describe what this is all about, and I'm going to do that. And I have some slides that I'll do that with. Okay, they'll be back there. So I'm just going to sort of quickly go along. By the way, he made my background sound so much better. Let me just say, the only reason I bought the stock at 12, I bought the stock, as I said, was because I was dumb enough to think it was the only company I heard of that was selling for less than $5 a share. And I thought I can buy more shares, so if it went up, I'd make more money. Those were my investment criteria. Dumb, right? But I got lucky. And then I realized how difficult the game is. But anyway, what I want to do is sort of describe quickly what this thing is about. So Yeah. I played the game, and then I got out of Harvard Business School. And so this is what it looked like to me. Okay, so I go after my audacious goals, and then I encounter my successes and failures. And if you're an individual in the markets, or you're an entrepreneur, you have to bet against the consensus and be right, because the consensus is built into the price. So if you have to bet against the consensus and be right, and that's difficult. You're going to fail a fair amount. Or if you're an entrepreneur, you have to bet against the consensus and be right. And so failure has become one of those learning processes. So pain plus reflection equals progress to me. So failure, and then what I got in the habit of doing is changing my approach to failure. Where failure seemed painful, what I realized is that after a while, it became more like a puzzle that would give me a gem. And the puzzle was, what would I do differently in the future so I would have a better result? And the gem was a principle that I would learn to do something better in the future, and I learned to write those down. And then I communicated with people by writing them down and reflecting on those principles. That meant that I would change. And so then changes lead to improvement, and then you go after more audacious goals. And it seems to me like it's like that over and over again. So this is what life looks like to me. This is what evolution looks like to me. Evolution of products, evolution in its various nature. You go after your goals. On your way to your goals, you encounter your problems. You can't tolerate your problems. Whatever the problems are, you have to diagnose them to your root cause. And the root cause can be that you're doing something wrong, or that you have a weakness, or somebody else is doing something wrong and has a weakness. So you can't depersonalize it. You have to look at it. And then whatever the diagnosis is that you get at the root cause, then you have to have a design to change and get around that root cause. And then step number 5 is you have to push through to results. So that's what it always looks like, evolution. And if you were to take any company, BlackBerry, they have their goals, they have the problems. If they don't diagnose it to the root cause and change, they will die. And if they do, they'll evolve. So it looks like that for me over and over again. And I've made terribly painful mistakes, failures. So one that comes to mind is that in 1981, 82, I thought, I did calculations that I thought that foreign banks would not be able to get paid back from the countries they lent to. They lent to a lot of emerging countries. They wouldn't be able to pay back. And I thought that was right, and I thought that would cause an economic crisis. And in August 1982, Mexico defaults on its debt. And I thought we're headed for a major economic crisis. Because I had anticipated them defaulting on the debt, I received a lot of attention. I'm on Wall Street Week, the show of the time, and I was asked to testify to Congress. And I thought we're going to have this economic collapse. I could not have been more wrong. It was the exact bottom in the stock market, August 1982, when Mexico defaulted. And that was the bottom. And it was painfully wrong because I lost money in the markets. I had to let people go. I came down to me. But it changed my attitude about decision making because it shifted my notion from thinking I'm right to asking myself, how do I know I'm right? It gave me a humility that I needed to balance with my audacity. It made me want to find the smartest people I could find who disagreed with me so that I can understand their reasoning and their thinking. And that is when you're doing your tips. I mean, that's where you come to, and you want to just get at the right answer. It doesn't have to come from you. And knowing that made me want to have a culture, which is conveyed in this slide. I wanted to have the most independent thinkers who would then disagree with each other to try to find the right answers, and then establish their principles. And as a result, we had our successes and our failures, but to learn from those mistakes and realize how much failures and mistakes is really the powerful tool to understand, to diagnose, and to find better ways of doing something. And that led to us stumbling our way along and learning. And then the exercise I did was to keep writing down those principles. So, okay, so what do I mean by having an idea meritocracy? I just want to be clear on that. To have an idea meritocracy, you have to do three things. Can you do these three things? First, you and others have to put their honest thoughts on the table for everybody to see. A lot of people will not speak honestly. Like if you think, when you were speaking to me and you'd say, boy, that doesn't sound like the smartest idea, that's what you were thinking. And you can convey that. People tippy-toe around that, or vice versa. So can you speak that way? Can you have, and then when you have disagreement, can you have thoughtful disagreement in which you are curious and you worry about being wrong? You worry when you're setting up the tips market, am I wrong? Am I missing something? And so can you have thoughtful disagreement and understand the power that what is in your head is only a small percentage of what you need to know. And so to be able to take in and have that thoughtful disagreement is a power. If we collectively can make better decisions and are curious about that, that's a power. And then number three, so can you have thoughtful disagreement? Isn't it odd that people don't do that? And then number three is you have to have protocols for getting past your disagreement and have idea meritocratic protocols. So that's what it was important for me to build the culture on that. And there's another factor. Can you know what people are like? Do you want to know your weaknesses? Do you want to know people's weaknesses as well as their strengths? It's so much more functional that way, because if you know somebody's weaknesses, you know what you can expect from them and together, and they can get around their weaknesses. So it was very important. I have a 4-minute clip. I don't know whether you want me to touch on it, but it gives you a sense of how this idea of meritocracy works, and then that'll be basically the end of it. Do you want me to show that? Okay. So, okay, here's a 4-minute clip. It was done I gave it at a TED Talk. It shows a particular tool and a meeting that we went into to give you a sense of what does this look like, this idea of meritocratic, in which everybody can get their thoughts, their honest thoughts on the table, and then disagree with them. So here it goes.
A week after the U.S. election, our research team held a meeting to discuss what a Trump presidency would mean for the U.S. economy. Naturally, people had different opinions on the matter and how we were approaching the discussion. The dot collector collects these views. It has a list of a few dozen attributes, and so whenever someone thinks something about another person's thinking, it's easy for them to convey that assessment. They simply note the attribute and provide a rating from 1 to 10. For example, as the meeting began, a researcher named Jen rated me a 3, in other words, badly, for not showing a good balance of assertiveness and open-mindedness. As the meeting transpired, Jen's assessment of people added up like this. Others in the room had very different opinions. That's normal. Different people are always going to have different opinions. And who knows who's right? Let's just look at what people thought about how I was doing. Some people thought I did well, others poorly. With each of these views, we can explore the thinking behind the numbers. Here's what Jen and Larry said. Note that everyone gets to express their thinking, including their critical thinking, regardless of their position in the company. Jen, who's 24 years old and fresh out of college, can tell me, the CEO of the company, that I'm approaching things terribly. This tool helps people both express their opinions and separate themselves from their opinions to see things from a higher level. When Jen and others shift their attentions from inputting their opinions to looking down on the whole screen, their perspective changes. They see their own opinions as just one of many, and naturally start to ask themselves, how do I know my opinion is right? That shift in perspective of going above it and seeing the full range of views shifts the conversation from arguing over individual opinions to figuring out objective criteria for determining which opinions are best. Behind the dot collector is a computer that is watching what all these people are thinking, correlates it with how they think, and communicates back to each of them based on that. Then it draws the data from the meetings to create a pointillist painting of what people are like and how they think. And it does all that guided by algorithms. Knowing what people are like helps to match them up better with their jobs. For example, a creative thinker who is unreliable might be matched up with someone who is reliable but not creative. Knowing what people are like also allows us to decide what responsibilities to give them and to weigh our decisions based on people's merits. We call it their believability. Here's an example of a vote that we took where the majority of people felt one way, but when we weighed people's views on the basis of their merits, the answer was completely different. This process allows us to make decisions not based on democracy and not based on autocracy, but based on algorithms that take people's believability into consideration.
The main challenge of this, and I think the main challenge that most people face, is what I'm calling the two U's. I think basically there are two U's in everybody, which is the intelligent, thoughtful you and the emotional you. And so when you get into it and you say, we're going to have a disagreement, would you like to know what I think? Would you like to know what I think of you? Would you like to express your thought to me? Would you like to know your weaknesses? Intellectually, of course you would like to know what people think of you because you can handle it. Of course it would be in your interest to know your weaknesses. But emotionally, that becomes a challenge for a lot of people. So there's a struggle between the two U's and how they get over it. And that's the exercise. And so if you want to look at what's made Bridgewater successful over that period of time, it is the ability to do that and to have that thoughtful disagreement. That's the culture in a nutshell.
So you put a lot of emphasis on this idea of some people within Bridgewater are regarded as being more believable than other people, and that when you're sort of figuring out what to do, you put more weight on the people who are more believable. But how do you decide who's more believable? I mean, I somehow have a feeling that you're probably of above average believability within the Bridgewater culture, and that probably some of the other very senior people are as well. If I'm a junior person who's just come in, and I think you guys are confused about a lot of things, or maybe I express my views in a different way than other people do because of my gender or because of my culture or because of something, how do I have a chance to get a high believability? Isn't there some risk that that this rating of people on believability will, with the best of intentions, slide into a rating of people on conformity, which is maybe a less attractive thing?
It's so much radically better than the normal way of doing it, because in the normal way of doing it, what happens is people don't even talk about it. So it's much more evidence-based and it's much more inclusive. So let's say you're in a room, and the way it is, and you're in a room and you're getting opinions that are coming at you. If you're smart, you're thinking about what each person's believability is in your mind, and you're weighing those things. Let's say if you just have a medical condition and you go to a doctor. Best way is triangulation by three believable people. You go to the three doctors. And if you can have them triangulate, and they were all sort of willing to argue with each other for the right answer, but also triangulate and they think that's the right answer. That's a great way to moving ahead. And if they have disagreement, open, thoughtful disagreement, it will bubble up the issues that need to be examined, and then you'll examine those things. And then if there's still a disagreement, the way you're going to make your decision is still going to be a believability weighted decision. Okay, that doctor sounds better or worse than that other. Now imagine that it becomes evidence-based, and it becomes very open. So, okay, so you go through that. How would you decide? So now we're dealing with, okay, are you believable on how to structure something, a tips market? And somebody else has another believability on that. We would say the ways that you can do that is to some extent, first of all, gather what everybody thinks is the believabilities and take that into consideration because of almost a vote or an assessment by more believable people. And you could also make it evidence-based if you wanted to say, okay, let's take a test. And let's say it was a math test. And you would say, how good are you at math? You could take tests and find out how good. The key is that you want to make it evidence-based and you want to make it open so that you're now doing it in a way that everybody gets to understand how you would do that. So that when I'm describing the going above it, if you're a partner in doing this with me and we said, how would we do that in an evidence-based way to get at that so that way we're not having either autocratic decision-making or democratic decision-making. The autocratic decision-making doesn't make sense because if I'm sitting there just unilaterally thinking I'm the right person because I'm the guy who in quiet is, that's not best. I want to know the smartest people I have who, if they disagree with me, I'm not comfortable going forward. I have to work it through. Or if I'm saying democratic, like everybody's got an equal say, well, that's pretty dumb too because they're not all equally capable. So if you and I were to say, okay, what are the fair ways that we can get at believability, albeit imperfect, it's radically better than what is going on, which is everything behind the scenes and not being clear.
So maybe to help people understand this better and maybe making it in a sense slightly more operational, let me ask the question this way. So let's take something that's fairly routine that we do here at the Kennedy School that every university does. We have an admissions committee, and the admissions committee admits students. And they read a lot of applications, and they look at people's grades, and they look at their scores, and they kind of read their letters of reference, and then they kind of schmooze. And, you know, the people on the committee who are more math-oriented tend to like the applicants who've done more math in their life, and the people who've done social causes tend to like the people who've done social causes, and they kind of work themselves to some consensus by talking. But nobody really keeps track of much. I think probably would be an honest assessment. If you were, so, you know, it's probably a long way before we're going to have like matrices of dots for every faculty member as we go through our days. But if you were us and you wanted to improve our decision-making process along the lines of your principles, I think it'll help people understand your principles. If you talk a bit about what would you do? I mean, you had a chance to meet the dean here earlier. If you were giving him advice about how we run our processes of selecting students or our processes of selecting faculty, whatever it is, better. How would you approach that?
Well, I think the first thing is in any decision, I think people focus too much on the decision and not enough on the criteria for making the decision. So the first thing I would do is to say, how do we determine our criteria for making the best decision possible, given we're trying to engineer for something? Maybe it's a certain diversity in the student body. What are we trying to engineer for? And how can we collectively go above that decision, any of the decisions, and say what are the best criteria for making those decisions? That would be step number one. How do we test those criteria? would those criteria have achieved that goal? So let me apply that. Let me find out which are the most successful students based on the criteria that we want to have as an end result. And let me take those criteria and look at them objectively. It would mean take into consideration, you might have a bias on a subject, and I might have a bias on a subject. Those biases exist. So how would we do that? Then let's take those rules, make them into algorithms or whatever. They're just that computer described things, and go back and say, is that good? Do we like that? And what principles then would we have that we will write that down? Okay, we've mutually agreed that that is a methodology that we think is best, that's also subject to test. The Board of Governors can examine that, XYZ can examine that, and say, okay, that's great. So now it becomes much more evidence-based. Then you go forward, right, and you apply those criteria. You can, in many cases, apply them with algorithms and then judgment that enters into it. If you're applying them with the judgment that enters into it, then you say, can I take that judgment and write it down in a log and even think, how do I make that into clearer criteria so that I can refine it? And you make that transparent. Then if you're doing it and it's radically transparent so everybody can see and the board can see and everybody can see, okay, that's going to make it better, right? So that kind of decision making becomes much more meritocratic. It'll mean, like, what are you good at? Like, if you do have an insight, like math, and we're having somebody who's going to go into the study math or whatever that's relevant, then how does your voice help to make a better assessment in terms of that process? So that's what it would look like.
So do you reject, and if the answer is yes, I have some sympathy with your view, but so if you read...
I don't care whether you have sympathy or not.
If you read Henry Kissinger's memoirs and talk about when they opened to China, I can't remember exactly what the formulation was, but there were a set of words that we and the Chinese agreed to with respect to Taiwan. And that was a hugely important thing, that we were able to open and have relations with China. And the essence of the way agreement was reached,
I remember it
was
well.
that those words were interpreted differently in English and in Chinese. And we kind of believed we'd made our deal, and they kind of believed they'd made their deal. And so both sides were kind of happy and they could shake hands. And somebody could have said, this is ambiguous, and tried to work through the ambiguity. But if they had, there wouldn't have been an agreement. And as I go through my life, there are lots of agreements that are reached, and lots of times when people figure out to cooperate together, precisely by having something that's kind of ambiguous, where both sides can kind of be happy, but it's not really stated clearly. Do you think that's a good thing, or to what extent is it the effort of your process to kind of purge that kind of mush so you can get to really clear thinking?
So I think when I'm hearing that, first of all, I want to say nothing is 100%, should be 100%. And you just stated a good principle that you might agree on. That, in other words, that sometimes it is more practical. You could write that down as a principle. Sometimes it is more practical for us to bring our greater level of common interest to have us have a conversation without agreeing on everything and allowing a certain amount of ambiguity to facilitate that moving forward. That's the principle I'm hearing Larry Summers say, and I could buy into that. All principles have to be practical. All principles in the end have to work. So I'll repeat that. No one principle, clarity to the extent is possible, is a desirable thing. However, some things are more important than other things. And having that conversation means that sometimes it may not be clear, and that ambiguity might facilitate a conversation that allows you to move forward. And that is a good thing. That's Larry Summers' principle that I would buy into. And so just be clear about that principle.
But there's clearly going to be some trade-off. I mean, if you accept my principle too strongly, you're going to kind of say, one of the things that it sounded like happens is I have a feeling if I worked at Bridgewater, I'd have some idea like what my believability was. And I might be unhappy, it might make me feel bad and kind of demoralized if like my believability was, only 15% of the believability of the guy down the hall. So how do you sort of trade off the fact that there might be kind of higher morale if everybody kind of feels like they're valued and regarded as believable versus the fact that some people probably are more believable than others?
I think you're trying to take it to such an extreme or such a perfection that it's not practical. And it's the nature of anything else. It's like if you write a law, there's ambiguity in the law. And then when the law is written, then we have case studies that over a period of time sort of refines that law over a period of time, and you get greater and greater clarity. And I think it's very much like that. If you have principles and you can start to get that clarity and then you work yourself through it, it's like that, as distinct from not having laws or the other thing. So now, don't compare it against perfection, because there's no such thing as perfection. But look at today. Do we as Americans know that do we have common principles that bind us together? Do we know individually what our principles are? Can each one of you write down what your principles are? If you take one group and take another group, do we know what principles bind us together? Do we know what principles divide us? Do we have ways of having thoughtful disagreements so that we can get past our disagreements and move on? Okay, we don't have those things. I don't believe we have those things, okay? So now, if you're comparing it against perfection, that's not something to compare it against. The question is, are you better in an evidenced, open way to be clear on your principles, what you agree in, and have thoughtful disagreement and get past them? That's the question, right?
So let me switch. In a few minutes, we're going to open this up to questions, but let me sort of switch gears, if I could, from the principles of running an organization to sort of current events in the economy and markets. And maybe here's a question that sort of bridges the two topics. You've emphasized meritocracy of ideas, power of argument, correction, careful and extensive reflection based on evidence as preeminent values. Many people would say that government by tweet is kind of the opposite of all of that and is really very dangerous, precisely because it doesn't embody those values and it basically maximizes, in your phrase, the amygdala rather than minimizes the amygdala. Yet, since we sort of inaugurated the current regime, which many people in the United States would say is much more government by tweet, markets are kind of up 25%. The economy's feeling better than it was 15 months ago. I dare say no White House has operated very much like the meritocracy of ideas that's the internal culture of Bridgewater. But there'd be a lot of evidence that would lead many people to conclude that this one has been further from those ideals than most. Is that a consequential problem for the formulation of policy? How do you square it with the superficially good results in terms of markets that we've seen? Maybe reflect a bit on that.
Okay, so I think that there's two parts to the question. The first part is the management, as you're describing, by tweets and that mechanism, and then there's the behavior in the markets, and how does that, how do they relate to each other, which I think probably don't relate to each other very much. And what I mean by that is, so I'll take them individually. Markets go up and down by the cash flows that you're going to get. Every purchase is a lump sum payment for a future cash flow. And if you change that cash flow, you change tax rates, for example, and you change regulations and so on, and therefore a stock is going to give you more cash flow, that's going to be worth more. So changing taxes doesn't even have to be whether it's good for the country or good for anything is not a question that we're really addressing here. We're addressing is, does that present value of those future cash flows going up? If you change the tax rate and you lower regulations, let's say, and then you can go out and you can make more profit, and that more profit has a present value if the interest rate doesn't rise so that the present value of that doesn't rise, that becomes worth more, and it should not be confused with tweets or anything else. So that's the first point. That's why also you can have a lot of politics or somebody not liking something, and you could have stock market. And nowadays, the behavior of the stock market also reflects less the overall economy, and also I say that there's two economies existing. There is one economy of the top economy, and then there's the bottom majority of the people, and there's two different things. And so don't be confused with even thinking about the one economy, but those stocks, in terms of present value terms, then go up because they make sense because you get more money. In terms of the issue of whether tweeting is, as a presidency, is a good thing or a bad thing, okay, I think the issue, really, the main issue of that, I'm not going to pass judgment on whether it's a good thing or bad thing, because all I'll do is give you my opinion as to whether it's a good thing or bad thing. I think the basic problem is that we don't go above ourselves to try to say what is good behavior and what is bad behavior. So I think as a general rule for people, that whenever anybody's having a disagreement with something, about something, whatever it is, that they should go above themselves and say, how should we be with each other? What type of disagreement should we have? And what are our ground rules for disagreement to resolve that disagreement? Then you can drop back into the disagreement and apply those ground rules. So I'm sure that President Trump thinks that that's a great thing. Somebody else thinks it's a terrible thing. But there's not a resolution of that.
But kind of based on
some
of the things you said, could we maybe, I don't know, here would be a going above high-level principle. Leaders should not make highly consequential pronouncements about direction without deliberating on them collectively with a group of other people who have expertise in the sphere where the statements are being made. Would that be a upper level principle that you would be prepared to accept?
Let me phrase it in the following way. You've just given me a principle that you think is valuable, and I might think that principle is valuable or not think that principle is valuable. It's a good exercise that we go through and say, you and I think that principle is valuable, okay?
Okay. Do we both? Do we agree on that?
Yes.
Okay, good.
Okay. In other words, I think thoughtful disagreement and that exercise is an overarching principle that I have. Okay. That doesn't make it law. It doesn't make it something. So the question that we're dealing with, the reality of our circumstances, is what you might think something. He might say, this is a means of me effectively communicating directly to the American population, the things that I think not filtered by the media, or he might have a different point of view. And we would want to hear what that point of view is, okay? So if you're not having that thoughtful disagreement and that expression, then you are not, so you're not having that thoughtful disagreement with a relevant participant. Then what we're doing is you and I are stating principles without that person having participating in that debate. That should be participated in, and that would be my aspiration. I don't want to have if I'm sitting down there with somebody else and I'm commenting on how you're running the Harvard presidency or something, and you and I are having a disagreement, and you're not part of that disagreement and not thinking, well, what do I get out of that? Where does it get us? We have gossip, we have all of those things. Does it make productive? No, I'm saying what you should do and what he should do, I think, is to go on a stage or go in an environment and have that thoughtful disagreement so that there becomes clarity, and then moving.
Here's what I'm finding hard about your sort of existential posture about these things. I mean, I understand it, I think. I'm not sure I do, but I think what you're basically saying is you're prepared to engage in reasoned debate with anybody about anything and reach a judgment, but if they're not part of the reasoned debate, you're not prepared to reach judgments about them and what they're doing. That's the position you're taking.
Yeah, it's very difficult. It's very difficult for me to do that without hearing.
And I understand that position.
On the other hand, much more productive.
On the other hand,
go ahead.
On the other hand, if we have actors acting as president of the United States, running companies, running universities, and they're not prepared to engage with experts. They're just not. And experts take the position, I can't really have an opinion unless I engage. And so nobody who has expertise can have an opinion because they're not being engaged with. It seems like it's giving a lot of license to people who are prepared to act with values that very likely are very different from the ones you share.
Yeah, so I then say, well, what is the system? How does the system work? And then you can have that debate without the person participating in that debate, is what you're saying. And then you can have an election, and then you have decision making. So, and that would be, I guess, our system. When I'm looking at literally what is happening there is I find, by and large, dysfunction. What I watch is I watch the television, and I watch everybody throwing all these ideas and gossiping and chattering, and I'm looking at the productivity that has in terms of even finding out how do we get at what's true, right? At least in a legal sense, there's a process, but what we have is this gossip, and we don't have any resolution, and that's a common dilemma. So yeah, I can have opinions, but also as I'm forming that particular opinion, I'm trying to get at what's true, okay? And if we're I'm
when I'm having trouble, let me put it really starkly.
We all have opinions.
Let me put it kind of more starkly, because you and I have been on a number of different panels and discussions over time and stuff. Here's what I'm finding troubling, and maybe you can set me straight. No one I know is more committed to a lot of emphasis on the meritocracy of ideas than you are. And no president or administration seems less committed to the processes around rationality and debate and emergence of truth and all of that than the current one. And yet it's very hard so no one seems further than what you so passionately stand for, and yet it seems so hard to get you to say anything that is skeptical or critical about them. That's what I'm finding. That's what I'm finding hard to follow.
And let me just be clear about this so that you feel this very, very well. You running Harvard as president of Harvard, and the notion of being in that particular position and having conversations with people who will say, I think you did a lousy job of that. You have...
There were many.
You failed in this way and that way and so on. First of all, I don't know what it's like to be in your shoes as being president of Harvard. I can imagine, but I'm a humble man who knows how difficult it is to find a confident opinion about the markets and other things. So I don't know what it is really like to be in your shoes. and then me to engage in that conversation and make an ignorant judgment out of that, I'd rather be in the category that I don't know, but I would say, yes, let's go up on the stage, Larry, and let's have a conversation, and let's work that through. Now, if you don't want to go up on the stage and do that, I think it was one of the great tragedies that you didn't do that. Okay? I think that you should have stood up on the stage and said for Harvard, here I am, ask me the questions and probe me and have a debate so that you can find out what's true and what it's like. That is so much more productive along those lines. I think there are so many ignorant judgments about what it is like to be in somebody's shoes, and I think that's a dangerous thing. So I'm hesitant to form opinions about such things. Yes, from a different point of view, it's not the idea meritocratic way that I'm operating. Okay, but I would say in terms of that thing, you also fell short in terms of operating in that, standing up in front of it and being idea meritocratic. That's what I would think would be the best path.
Okay, I'm gonna resist the temptation to defend myself on that one and ask you a different question. After which there are 4 microphones, and so people want to ask questions should go to the microphones. So Ray, there probably are a fair number of economics professors in the room, or finance professors in the room, or economics and finance students whose mother or whose great aunt or whose cousin or whose something observed that there was a lot of turmoil in the market in the last 2 or 3 weeks, and who called them up and said, there's all this turmoil in the market, it seems really scary, what should I do? What answer should they have? I mean, obviously it depends on the precise circumstances of their great aunt, but as a general matter, what advice should people have given to someone who said, you're a professor of economics and finance, you're supposed to kind of know about this stuff, kind of what's going on, and what should I do with respect to the fairly dramatic events in markets of the last few weeks?
Okay, I'm going to answer the question at 2 levels. One is just a very quick, superficial thing, and then one is sort of explaining a little bit what's going on. On the first one is you cannot possibly succeed that way. If you're going to get scared, aunt, whatever your name, or grandma, whatever your name is, and the stock market falls X%, and then you're going to get scared, you got to do the opposite. Okay? It's when you're not scared, you probably want to sell. And when you're scared, you probably want to buy. I mean, but anyway, the best thing is don't play the game. Okay? Because it's pros against you. The best thing you could do is know how to have a balanced portfolio. And I could explain how to have a balanced portfolio because you ain't going to win that game. The greatest mistake of the individual investor is to think that that market that did well is a good market rather than a more expensive market. And that market that did badly is a worse market, and I don't want any part of it, rather than a cheaper market. And you can't make that distinction, so please don't call me then. Just don't do that. Would be my first advice for her.
Can I just say, none of you paid anything for that advice, but based on my knowledge of these things, that was very valuable advice. That if you can discipline yourself and your relatives to follow over the next substantial number of years, will be worth a lot of money to you. Okay, having said that, I now, on behalf of everyone in the room, will pledge not to do any goofy punting around in markets on the basis of the analysis you give us of what's going on, what's going on in the last several weeks. So we won't act on it. So you can feel free to give us your best analysis.
Okay, yeah. So I did a 30-minute video called How the Economic Machine Works, and it just describes in a nutshell a template for that. But I just want to give it a real quick nutshell because there's a template and then things viewed within their context. Over a long period of time, we raise our living standards through productivity, which really comes from learning how to do things better so the outcome per capita rises. determines our economy. Around that, we have two cycles, basically. Most importantly, we have two main cycles. We have a short-term debt cycle, which is also called a business cycle. Recessions, expansions, and so on. And then we have a longer-term debt cycle that I won't get into right in a minute. Okay, so to explain the short-term economic cycle where we are, it's like when you're at a recession and you stimulate through monetary and fiscal policy, it's like a car driving at 70 miles an hour picks up, but the capacity to produce grows at a slower rate. So think of it as like a car in front of you that's driving at 50 miles an hour, but your car is going at 70 miles an hour, and as you come closer to its constraints, that 50 miles an hour, you're now going at 70 and you having to come to 50, you have to do it, you have to put the brakes on. Okay, and that becomes that part of the cycle. When you're late in the cycle, so in other words, when the economy is sort of booming and growing at a faster rate when there's a limited amount of capacity. What's happened is, for various reasons, there has been a lot of stimulation hitting the gas as we are in that part of the particular cycle. And markets go up and down more because of interest rate changes. Because as I told you before, what happens is an investment is a lump sum payment for a future cash flow. And the discount rate, the interest rate that we use to calculate the present value of that, affects all asset prices. So when you're in a position where you're late in a cycle and you're having the stimulation that's happening in that stimulation, and then there's the increased risk of that discount rate rising, in other words, interest rates going up, which happened, then that affects all asset prices. And so all asset prices then react to that. And that's basically what happened. What we have is a lot of cash on the sidelines still, because central banks have bought $15 trillion worth of financial assets on their balance sheets. And so we have a lot of liquidity there. Companies have a lot of liquidity. You fall into one of two categories now. You either have a lot of access to money and you have a lot of money, or you can borrow a lot of money. It's very, very easy. Or you don't. There is this vast majority of the population, unfortunately, that doesn't have access to any of that. That's the majority of the people. But in any case, when we're talking about the markets, there's a lot of liquidity, and you're going to get cash on top of cash. Companies can borrow cash, they've got cash, the cash is coming from in, and so on, so they buy that. And so we're at that part of the cycle where we're having both that discount rate and then also all that cash around that can then go buy it. So what you see is you see the market sell off because the interest rate changes. Then you see people with a lot of cash, companies buy back their stocks, companies merge, individuals got cash, they go in there, and that's what we're seeing.
Okay. I am going to get myself reprimanded afterwards by the organizers of the forum for finding you so interesting that I've asked questions for longer than I should have. But there is still some time for questions from the floor. We've got the ground rules that people who are asking questions should introduce themselves, that questions are short, and that questions end with a question mark.
Hi, is this on? Thanks so much for coming. My name's Ned Shell. I'm a joint degree student at the Business School and Kennedy School. Recognizing the merits of this idea, meritocracy, I see how it works really well in kind of a organization where everyone's really bought into it, and this kind of dovetails off of the conversation you were having a moment ago. I wanted to go into government right after graduation, and that's an apparatus where this is probably not well received or implemented. So I was wondering if you have any practical advice for people like me for how to reap some of the benefits of this theory or form of organization in an organization that would be very resistant to it.
I think any group of people, and that includes your family, it includes your friends, it includes the group of people that you're working with together, can still decide whether they want to operate in that way or how they're going to want to operate together. So you could still say, Do we have a pact that we're going to be radically truthful and transparent with each other? Do we have a pact that we can have thoughtful disagreement that I will appreciate and go through? In the book, I lay out a bunch of protocols of things to do to facilitate a quality disagreement. And then do we agree that we want to have an idea meritocratic way of getting past that? Some protocols might be if we have a disagreement. What you can do is you can say, if we mutually agree on a mediator, you could have a friend, and you could say, okay, how do we have that mediation and that to get past our disagreement? Or can we have those three people help to do that? So there's always a way for you to operate in that way. Your biggest barrier, you may not have the whole organization, but you can operate that way. The really biggest of barriers is that to you barrier. Okay, can you still do that? Do you still want to put your honest thoughts on the table and have the other person do that? Do you still value disagreement so that you can get at the better answer? Those are the basic fundamental questions, and any group of people can decide how they want to approach those questions. I'm just curious in asking, let me just ask that question. What do you think? Would you want to have idea meritocratic decision making in which you can put your honest thoughts on the table and other people put their honest thoughts on the table? Or, yes? Raise your hand. I'm curious. Okay. No, because it's too scary. I don't know how honest this crowd is. Okay, right. What about that radical truthfulness and transparency? To be transparent, so actually people could see things firsthand. No's? Yeah. Okay, you're going to have to make these decisions. And then having idea meritocratic ways that you can get past your disagreement. Whether you have a marriage or a friendship or something, you better damn well have agreed upon ways to get past your disagreement, ideally, idea meritocratically. So wherever you go, you're going to have those questions.
Thank you.
Thank you for being here today. My name is Yu Heng Wen, a first-year MPA student. I'm also one of the 3 Dalio scholars at the ICE Center. Thank you for your generosity.
Thank you for doing that.
I have read your book's principles, watched the YouTube videos, and read your interviews online. During one of the interviews, you mentioned about a framework of the economy being the sum of all transactions, and how Bridgewater used that framework to have predicted the 2008 financial crisis. So can you talk a little bit about the framework and its application predicting the financial crisis, and maybe on a higher level, the role of financial institutions, including hedge funds, in preventing or contributing to the financial crisis? Thank you.
Well, the first one's easier, and the second one sounds like a topper for a big thesis or something. I don't know that I could answer that quickly. I'm saying the traditional notion of economics in which there's supply-demand curves and in that way doesn't make much sense to me. That what actually happens is that the price is always the total amount of spending divided by the total quantity of items sold. And if you can understand, if you look at the participants in any market, and you say, how much will they spend, and you understand their motivations for spending, and you add that up, and then you look at the quantity sold of anything. We could use wheat as an example. How many bushels of wheat are sold, and what is the total spending? Then you will always get the price. It's not a theoretical thing. That's literally what the price is. And so nowadays, we can go from being at a very granular level, practically, of knowing what each person's circumstances are, or each entities or each group, who are the buyers and the sellers, and adding up, what are their motivations to try to get at that. And the idea that there is an aggregate economy and that's more removed. So when the financial crisis came in, when we anticipated the financial crisis, yes, we anticipated the financial crisis in 2007 about the financial crisis. As we go through, we said by entity, how much do they need to borrow, how much would be lent by what entities, and figured out that there was not enough money to be lent. And then when that meant that there wouldn't be enough money to be lent, that you have debt problems, that would mean credit spreads and things would change. And then with mark-to-market accounting and so on, that meant that balance sheets would tighten. And so you can imagine it. So think of it like a Rube Goldberg model. I don't know if that was a term that you and I would know because the way we were of an age that we do. But you think of that in one thing leads to another in that mechanical way. And so it's those transactions that you can do at a granular level. That's the answer to the first part of your question. The answer to the second part of your question is that I think that the role of institutions and hedge funds or whatever in terms of their impact on the markets, so or whether we have a good thing. I think that the efficiency of any market is an important thing. So in other words, knowing whether something's going to go up or down and taking a bet on it and so on. And it's like transparency of knowing statistics. I think over the long run, it's a good thing. But that the real problem is that sometimes people go crazy. And so they can do crazy things. And so, and I think that to the extent that you provide rewards for people, I think it helps them. But the real problem of the financial crisis is the not being responsible in terms of borrowing and a certain particular dynamics. And then central banks, in my opinion, looking at growth and inflation rather than looking at credit growth. In other words, credit growth, they're controlling credit growth. And if you have a lot of credit growth to buy financial assets, debt growth to buy financial assets, it doesn't affect growth and inflation directly, but it can create a debt that may not be able to be paid back. And so if you look at our 2007-2008 financial crisis, or you look at almost any financial crisis, the really big busts, Japan in 1989 and 90, in terms of that, it was not inflation or growth that was the problem. It was using leverage to make financial processes to produce a lot of credit growth debt that couldn't be paid. And those become the lessons, I think, more of history, not the issue of those financial transactions for intermediaries. A financial intermediary, there'll be some people who will provide capital. And if you do it in the long run and provide capital in an efficient way, it provides opportunity for those people who have better things to do with the money than the people who have that capital. And that's a fantastic thing. That's great. You don't want to hurt that. You don't want to have the inefficiency. You can have somebody who will, a group of people who will pile on or maybe then make something disorderly. But really, at the end, everybody who sells or buys in the market has to do the opposite. So if you sell short, by way of example, and that contributes to the amount of selling, so he's going to be a buyer. Are they smarter than you? And then you have to buy that position back. So that is not as problematic to me in terms of the efficiency than the other things that I'm referring to in terms of the irresponsibility in the following of monetary policies.
I'm going to take a couple of more questions. Yes.
Hi, my name is Luke Haney. I'm a senior in the college. I read Principles this summer while drinking a beer in the UK, and it was wonderful, as was the beer. My question for you is, do you think that college campuses today are conducive for meritocratic decision-making and debate?
I'm not an expert in speaking of all college campuses as a whole, but my general impression is that I'm deeply disappointed in the fact of bringing in a lot of controversy to be able to have that thoughtful debate without ideological barriers. So as a general notion, I would say that I would be disappointed, but I'm not an expert on college campuses. But I would think that's what it's about. And just generally speaking, my impressions would be disappointing.
I would be sympathetic to your answer.
Hi, my name is Andrew Kingsbury. I'm an extension school student, and I work for a startup called Quibble. Our CEO actually worked at Bridgewater. But my question is, where would you peg the percentage-wise the potential for recession in the United States? I know you took out a pretty big European short position, so specifically the United States.
Yeah. Let me comment that any positions that are, it's a good example of reported in the media or whatever it is, can easily be misinterpreted. And I think that if you were to take that, I won't comment on our positions, but I'm just saying don't read anything into that because you'll probably be misled by it. But I would say that the probability of a recession prior to the next election is
midterm or
presidential election. I think very low in terms of. I don't think we're going to have a recession anytime soon. I think we're not even in a bubble stage yet. I think we're in a pre-bubble stage that could go into a bubble stage because of this thing that then could be followed by a bust phase. And so that in that last phase of the cycle would be my guess. And I would say that the probability of a recession in prior to the next presidential election would be relatively high. What would I say? I don't know, 70% or something like that?
70%, even though we're not yet at a bubble phase. So that's 2.5 years to 70% chance that within 2.5 years we get to the bubble, through the bubble, to the bust.
Right. So, and I can't say if it's 70, 60. In the odds favor that what you would do is usually it's about before it hits the financial markets. It's about after it hits the financial markets. It's about 14 months, and it varies in terms of that because that produces the squeeze and that notion. So as you work back from there, and I think that my own notion is we're at the later stages, but not at that bubble stage. And so I can't be precise, but I would say a pretty good chance that around then that we would have a recession. And I don't want to say I'm scared about a recession. And I'm scared about a recession mostly because there are these two economies that exist. In other words, I did a piece, it's on our website or on LinkedIn, that breaks the economy into two economies. The top 40%, the bottom 60%, what's the majority of those like, and so on. And I have another sort of principle. If there's a big difference between, let's say, rich and poor, and you share a budget, so you have to discuss how the pie is divided, and you have an economic downturn, you have conflict, you have argument, you have an emotional. And so I would say that that's why I'm more worried about an economic downturn and think that monetary policy should be more asymmetric because I think, supposing we had a 2.5% inflation rate or a 3% inflation rate. Okay, that's not the best. I mean, you don't want to have a bubble and that it's going to bust. But it shouldn't have we're all not going to be crying about that. That will not be the thing. So I think there's asymmetric, and I think also the asymmetry having to do with monetary policy, how much you can lower interest rates, how effective QE is in the next dosage, and those kinds of things are things that are concerns to me.
Okay, I'm going to take these two questions and let you answer them as a group, answer the two of them together, and then we will adjourn.
My name is Tlek Zainulaev. I'm a graduate student here at Kennedy School. My first question is if you look back in history, what we are witnessing now is has been seen in 1930s, and we all know how it ended. What do you think we should do now to avoid the same fate? And the second question is...
One question per customer.
Okay, and let me take that because otherwise I won't do as good a job at remembering it and answering it. So if I can,
please.
The issue, the lessons of the 1930 had to do with the differences in the element of the wealth and the tensions, and then the issue of conflict, and so and then you have conflict and then the foreign enemy and all of these types of things. I think the thing to watch now is how conflict is handled. If you look at the 30s, and again, there's a piece on LinkedIn that you can read that is populism and describes those cases. When the conflicts became so dysfunctional, so that they affected the efficiency of countries, populism was very popular because the left and the right will have more of a conflict, and somebody wants to bring order to what is a chaos. For democracies, chose to be autocratic, chose to be dictatorships to bring order to the circumstances. So the issue, I think, of those lessons is to be careful about that and actually to appreciate the art of thoughtful disagreement and how can you get past it. I think if we know what are the principles that bind us and how do we operate, that would be the thing. How do we handle conflict is going to be our most important question. How do we handle conflict? That'll be our most important question. And that'll come down to an individual choices and so on.
My name is Jing Zhou. I'm a prospective student of Harvard Kennedy School. My question is that in your book, you mentioned in 2007, before the financial crisis, you had already noticed the problem. And you talked this with the White House, but unfortunately, they didn't take it seriously. So now at your third phase of your life, have you ever thought to establish a system or organization that can connect the business companies such as Bridgewater with the government so that the government can do a better job in the future?
I think just government leaders and people in positions choose whatever inputs that they want to have. And so I think that's the right thing to do. When Larry's in government, and we would talk about things, and some people want to talk, and some people don't, and that's their prerogative. So there's no forcing them. There's no, if they want, I want to help everybody succeed to whatever extent I can, and whatever I understand, I want to pass along whatever my best thinking is for them to consider, and it may be right, it may be wrong, but I want to pass it along. If it's welcome, the people will take it, and I don't want to force it on anybody. And so I don't think I could make an organization that would make that work.
Thank you.
Let me make 3 concluding observations. One, as you saw, Ray and I have enjoyed active conversation and vigorous debate for many years. Sometimes we have different views about events, and I have a common suggestion which Ray has never accepted, which is that we reduce the matter to a bet, and that we bet, for example, 1 basis point of my net worth versus 1 basis point of his. And Ray has consistently rejected suggestions in that spirit. Second, I will make the bit of product advertising. Bridgewater.com, which has a certain number of the commentaries of Ray and his colleagues on a range of economic and financial affairs. If some of you are looking for commentary that is analytically sophisticated but accessible without substantial training in economics and finance, there is no better place to turn to. I'm fortunate enough to have access to a huge amount, to much more commentary than I can read. And I always read the Bridgewater commentaries, and that's a tribute to Ray and to the organization that he's built. And finally, let me ask you all to join me in thanking Ray for the gift he has given through his writing, his analysis, and the special gift he's given with his candor and open discussion here tonight. Thank you, Ray Dalio.
Thank you. Thank you, Larry.